Welcome to our weekly roundup of key business developments in Sri Lanka. I'm Nishani Pigera. Let's first take a look at the main stories for this week. External debt restructuring talks enter crucial stage. Stock market at a 2-year high. And foreign currency reserves at 39th month high. In our main story this week, the International Monetary Fund expects that a commercial creditor deal will be finalized before the completion of the second review in June. Sri Lanka is currently in the final stages of restructuring $12 billion owed to private creditors. However, Sri Lanka is hard-pressed to reach such agreements by this time frame, as it is yet to sign an MOU with the Paris Club of Nations and China on restructuring debt. These agreements were essential for the IMF to release the third tranche of the funding facility, amounting to $337 million. Global investors and Sri Lankan officials will hold the second round of talks in Washington, D.C. next week, aimed at finalizing a deal which will see the complete overhaul of $27 billion in foreign debt. On Wednesday, the all-share price index at the Colombo Stock Exchange reached a 2-year high, crossing the 12,000 index mark. Renewed interest in the banking sector from its attractive valuations and current lower interest rate environment is driving the market higher. The index is now up a significant 12.6% from the start of the year. Increasing retail and institutional investor participation in the bourse over the past 2 weeks is driving daily turnover in April to average 2.8 billion rupees, much higher than in the first 2 months of the year. Sri Lanka is slated to sign a preferential trade agreement with Indonesia by March 2025. The first round of discussions was held earlier this month. According to Jerry Sambuga, Deputy Trade Minister of Indonesia, the agreement will serve as a building block towards a free trade agreement. In 2023, bilateral trade between the two nations reached $370 million. In a bid to expand its export markets, Sri Lanka is eyeing an economic and technology cooperation agreement with India by the end of 2024-2025 financial year, and free trade agreements with China, Malaysia and India. This week, the government announced that it had successfully settled $1.9 billion in foreign debt and interest payments during the last 19 months. The government had settled outstanding amounts to its multilateral partners, including the Asian Development Bank, Asian Infrastructure Bank and the European Investment Bank, among others. In a surprising move, Ali Sabri, Minister of Foreign Affairs, announced that Sri Lanka is looking to enter the BRICS consortium to grow the economy following the economic crisis. However, Minister Sabri added that the nation should first expand its free trade agreements before the bloc. BRICS represent 41% of the population, 24% of global output and 16% of global trade. Last year, BRICS admitted Saudi Arabia, Iran, Ethiopia, Egypt, Argentina and the United Arab Emirates. Foreign currency reserves in March reached a 39-month high of almost $5 billion. Worker remittances in March was a significant $572 million, bringing the year-to-date inflows to over $1.5 billion. Further, a resurgent tourism industry brought in just over $1 billion in earnings. Current reserves cover about 3 months of exports. In our weekly tourism update, during the first 9 days of April, over 50,537 tourists arrived in the country. Daily arrivals fell to 5,615 from 6,748 recorded in March. Since the beginning of 2024, the number of arrivals has reached just over 686,000. India was the primary source market, followed by the United Kingdom and Russia. Tourism earnings in March grew to $338 million, bringing the first quarter inflows to just over $1 billion, significantly higher from a year earlier. SLTDA is targeting $4.3 billion in earnings for 2024 from 2.3 million tourists. At the Treasury bill auction held on Wednesday, yields on all maturities decreased marginally. Bids amounting to 146 billion rupees were received, of which 58 billion were accepted. The Sri Lankan rupee continued to appreciate against the dollar this week, with the central bank's indicative mid-spot rate ranging around 298 to 299 rupees. And with that, we round up for this week. Wishing all our viewers a happy and prosperous Sinhala and Tamil New Year. Until we see you again next week, thank you for watching. Stay safe.